Good morning, everybody, and welcome back to the Opportunistic Trader. We're now joined by Phil Flynn of Price Futures Group and a Fox Business Network contributor. How's it going, Phil?
I'm doing great today. We've gone through a period here. I was really considering building an ark with all the rain that we've had
Has it
here
been
in
bad up there
Illinois.
in the Midwest?
The animals were starting to go two by two, I think. So we were really getting flooded out here. Lightning, my house was struck by lightning,
Oh,
lost a whole bunch of stuff. It's been one of those weeks. September is starting off as a September to remember a bit. So,
well,
but I'm glad to be here where things are more calm.
other than the rains and the lightning and the flooding, it is good to be back in September with the markets. Definitely got some good volatility across all markets. This is more traditional markets here, with markets really moving around opposed to August summer lulls. But we got a lot going on today. Got some big hog news that you want to get to, and then we got DOE inventory reports. Energy markets been really active the past few weeks. So take us through what you're thinking right here in energy.
I think right now, obviously, we're waiting for the inventory reports. Last week, obviously, we got back up above $70. A lot of that was driven by Tropical Storm Gordon, which its track obviously going directly into potentially New Orleans and right into Refinery Row could have been a problem. But the bigger problem is people were overbuying it a little bit. And what happens a lot of times when you get these tropical storms in the energy market, you buy the rumor, you sell the fact, you generally overreact to the upside. And when the storm passes, you overreact to the downside. And so trading hurricane markets can kind of mess up a trend that probably would have happened anyway. We probably would have seen oil get above $70 a barrel anyway and retest that upper Bollinger Band. In a week, but it just happened faster because of Tropical Storm Gordon, and that added to the volatility. Interestingly enough, if you look at the sell-off yesterday when the market looked pretty terrible, it did hold right on the moving average line, so it did bounce off of that area, and so now we're staying tuned right now for today's inventory report. Real quickly, last night we got the American Petroleum Institute report, and it was really kind of a mixed bag. I mean, you could have read it as bullish or bearish. The headline crude number was supportive because you had a drawdown, I think, of 1.4 or 1.5 million barrels. We saw an increase in Cushing, Oklahoma, which some people took as bearish. But really, if you looked at the private forecast or Genscape number, it was pretty much in line with what the market was looking for. There is a growing concern that we're starting to see a counter-seasonal increase in gasoline supplies and, distillate supplies. And that is happening really because the U.S. refiners continue to refine oil at a near record pace. They're producing a record amount of gasoline, a record amount of distillates. And even though we saw a drop down in refinery runs, if you look at the actual numbers that they were running through the refinery last week, still over 17 million barrels of crude a day. That's an incredible number. That's a number that we couldn't do just a few years ago. And so, we talk about shoulder season and a slowdown in demand. It's pretty incredible what the U.S. refiners are going to do. I think when we were on a couple of weeks ago, oil looked terrible. And we were talking about that double bottom in the price, I think it was around $63.50. And I said, there's a high probability that barring any disaster, that was going to be the low of the year. And now we're almost $7 from the peak to the valley. We were almost $7 off of that low. And so it's looking even more convincing that low for the year is in. The question is, where do you go from here? From a day trade viewpoint, there is a lot of support here. It's going to come down to the report. So you're definitely going to get some opportunities to swing trade. There is less pressure right now to be, very, very committed at this point because there's a few months till the real demand starts to kick in. But we still think that the lows are in for the year, and we would be using market weakness to put on longer term positions. What are the naysayers saying about oil? Why is it bad? They're worried about, oh my gosh, the global economy is going to fall apart. Demand is going to be terrible. All of these fears. But if you look at the stock market's performance here in the U.S., it's telling you a different story. It's telling you that the U.S. economy is doing good. The world's biggest consumer is okay. We have these concerns with Asia and the emerging market, but I think they're really being overplayed. So we still feel that oil demand is going to surprise to the upside.
But on that, with emerging markets have really underperformed. I mean, we're just talking about Shanghai, which not necessarily emerging market in China, but a lot of the that's down 20%. But there's definitely the EM emerging market index is down heavily. So the U.S. story is very different from EM, and is that something that is going to affect demand?
People think that it will, but and it could if you believe the contagion story that that things are starting to unravel. But I have a tendency not to believe that at this point. If you look at where the emerging market turmoil started a few weeks ago, it was in Turkey. And we really believe the Turkey situation wasn't necessarily an economic situation that started the problems. It was a political one. Erdogan, of course, has been running the economy into the ground. He's taken over the central bank. So it's a self-inflicted wound because he put himself in charge of the economy and he has no clue how to run an economy. So if you look at the Argentina situation, which has been a big concern, already I believe that they're taking the correct steps to calm the markets, and the International Monetary Fund is already in talks with them to stabilize the economy. When we talk about Asia and China and their concerns, that's a different story. It's not really about their economy slowing down. We look at some of their data softening a little bit, but it's more of a direct relationship of the trade war concerns, and people want to get their money out of there. And I do think it does show the vulnerability of the Chinese economy to this trade war, and they're going to have a harder time, maintaining growth if the trade war continues. So that's definitely what their stock market is telling you. But what the Chinese government has told you is that if the trade war continues, what are they going to do? They're going to do a lot of infrastructure spending. They're going to do a lot of support to the market. And we know from the last time in 2014 and 2015, when China did the same thing, they got back into the economy, spent a lot of money. They were buying back their own stocks. We saw the Chinese oil demand just surge unbelievably. I think the demise of global oil demand is being greatly exaggerated. And the reason why I think that is because we have evidence that that's not the case. It's probably not going to falter. And we don't think the wheels are going to be coming off right now. So I'm not too worried about it.
Yeah. And what about, you wanted to get to hogs. There's a story, and that also has to do with China. Tell us about the hogs.
Well, it's this African swine flu, and it's a situation where thousands of hogs are being destroyed. There's some debate. I've talked to different people about, what happens when these hogs are destroyed. Some people say they can't be eaten. Some people think they are. There is this more evidence that some of the hogs that are being packed out of China, it's getting into actual products. So they're definitely seeing signs that this disease is going to spread. That's also going to open up the market, tariffs or no tariffs for U.S. producers, because the Chinese diet is heavily dependent on pork. They have some more hogs than anybody in the world. They import more hogs than just about anybody in the world. And so some of the trade war concerns for the hog farmers here in the U.S., I don't think they're going to have to worry, because obviously they're going to be losing a substantial amount of their hog population. if they fail to control this, the question is, how many hogs are you going to lose?
Right.
And now the closest thing in recent memory that people might remember is the PED virus. I can't pronounce it correctly. Porcelain. Well, anyway, you don't want to hear about it. But anyway, PED, of course, which caused the hog market to have one of the biggest moves probably in history. Or at least since the 1970s, because of the loss of the hogs. And so we could be at the very beginning of the same type of situations. There's two differences with the diseases from my understanding. I'm not a veterinarian, though I do watch Dr. Paz sometimes on that cable TV show. But I do know from the people that I've spoken to is that this disease is a lot more contagious than PED. It affects hogs of all ages, where PED basically only impacted the baby pigs, the smaller sows, and where this disease, it's unclear. Some people think it's safe to eat the meat after they've been killed. Other people say it's going to be banned, but they don't want it to get into the food system regardless because of the danger of infected supplies infecting other parts of the world. So at the end of the day, to zero in on this particular disease, it could lead to a very, very big move. Now, obviously, if you're trading October hogs, you're trading December, the volatility is going to be very high, and we've seen that. Some of the hog traders that I'm speaking to, is maybe a safe way to play it is to spread it. Buy, for example, maybe the February hogs and sell the April hogs of 2019 to reduce maybe the risk a little bit of being crazy. But this could be the beginning of a major, major move in the price of hogs. And if you go back to the PED virus, I think we went from 40 cents to 90 cents and maybe even higher in some of the contracts. So this could be something that could be big. Or, maybe they'll come up with a cure tomorrow. Maybe they'll be able to get it under control. But if they don't, it's definitely something that should be watched. In fact, Barron's Magazine did an article on it this weekend. I think they quoted me in it as well, but a lot of the experts. But it's something you've got to watch, and it could be a home run.
What about, do you have any insight on what the hog situation might do to local companies in the U.S., like Dean Foods or, other?
Generally, it's going to help them. Depending on where you're at in the forum, because assuming that the U.S. market, the U.S. hog population doesn't get infected, now you're going to be hog butchered to the world, and obviously the hogs in China, if you're destroying them, they have to be replaced somewhere because people have to eat. So that's really going to open up the market for some of these U.S. companies, your Hormels, your exporters.
Mm-hmm. That does make sense. So we'll definitely keep an eye on that hog story. Angie mentioned it yesterday also. I see hogs are trading higher today. They're volatile. So we'll definitely keep an eye on that. So we have the data. So take us through. So today, actually, I think since it was a U.S. holiday, we have 10:30 natural gas data and then 11 o'clock oil data.
We do. And I think if you look at the natural gas market, you're seeing this market start to roll over a bit. This is something we've been talking about for the last couple of times we've been on, that the production on gas is overwhelming the fact that the supplies are well below the 5-year average. And it's only going to get worse, I think, in the coming weeks. And Tropical Storm Gordon didn't do the market any favors. Back in the olden days when we had a tropical storm, it was really bullish for natural gas. I remember, natural gas, exploding up $1 on a tropical storm. But because of the fracking, we're producing a lot more natural gas on land, not so much in the Gulf of Mexico. And generally, because of the potential of power outages, cooling temperatures, it actually has turned out in most cases to be a demand destruction event as opposed to a production destruction event. And if you look at the national hurricane map today, hurricane season is really heating up. And I'm going to quickly go
We know
to the
about that
National
very
Hurricane.
well down here in South
Uh,
Florida. I think it was
oh,
actually
I
about.
know. I'm telling you, you guys buckle up. You had me worried over there. I hope you got yourselves tied
Well,
down.
you
It
were
was
mentioning
crazy.
earlier, you were mentioning about the rain that you had. We didn't have a very
Oh,
good Labor Day weekend. Larry and I were sitting indoors with our
right.
dogs and our kids because it was raining all
Yeah.
weekend.
Yeah. Oh boy, I'm sorry about that. Yeah, it was bad. Yeah, I mean, we're looking at a lot of activity in the
That's
Atlantic.
not good.
No, no, it's not, and it's just the conditions are conducive to storms. I mean, right now you have Hurricane Florence that does not look like it's going to be a threat. You have another tropical cyclone formation that's going to be a cyclone, and and within the next 24 hours, it's too early to get a strong track. We're hopeful it's going to follow Florence and go off to the east a little bit, but we're not sure. And then, of course, you have another storm after that that is developing basically right in Africa right now that they expect will get off the coast of Africa. So you're gonna be not only watching the charts, you're gonna look at the weather. And to learn how to trade weather markets, it changes based on the storms. From the way we used to trade a hurricane, you know 10 years ago, it's changed because of the production areas have changed a bit. The fracking has changed it a bit.
Right.
But we definitely know that any one of these storms have the potential of moving this market substantially, either to the upside or the downside, just depending on what type of storm it is.
Yeah, absolutely. And Bryn Kelly's actually also mentioned that to us as well because we've seen in the past decade at different times the hurricane really affecting the natural gas market, and it was actually interesting over the weekend. Natural gas didn't move at all, and it was crude that moved on it, and so it has a lot, I think, to do with those dynamics you were mentioning. So we'll
Right.
definitely keep a close eye on the storm market. Us in South Florida are definitely hoping we don't have to deal with any of those, but typically we do. But yeah, so thanks a lot. A lot of great information. We got 10:30 data in natural gas, 11 o'clock Eastern time in Department of Energy for crude. So we'll keep an eye on that. Thanks a lot, Phil Flynn of the Price Group and Fox Business Contributor.
Thank you.
All right, we'll talk to you soon, Phil.
Bye bye.